Hello, and good morning, guys. It's a lovely Wednesday morning. Today is the 29th day of July 2026, and here's what we are looking at yesterday. And yesterday, we were looking for potential buys above this level here, above this 4051 level. That's why we were looking for our potential buys, and we never got the confirmation for the buys. For the sales, excuse me, it's cold weather is really taking a toll on me. Someone suggest a remedy for this cold on the comment section there. And so for the sales, we were waiting for potential sales below this level. And this is the candle that gave us the confirmation for the sales. This is a candle that gave us the confirmation for the sales. It closed below our level. Our level was 40.44455. And this candle closed at 40.415. Okay, this was 0.415, this one was 0.55, so this one closed below this level here. The retest price didn't retest this level immediately. Just left, kept pushing down. You can see the bearish momentum, very good bearish momentum, very strong. Yeah, this very strong bearish momentum, indicating that price wanted to continue pushing down. You can see the size of the body and a very small wick here. This meant that price wanted to keep pushing down. Okay, this is price showing you the direction it wants to go. You have to learn to read every candle. Every candle has its story. Every candle will tell you what price wants to do. Okay, so learn to read the individual candles. It will really help you in this market. So that's the confirmation we were waiting for. So we were waiting for a retest and entry, and after the breakout we had this fair value gap here. I was really watching for what would happen on this fair value gap, and we had the same fair value gap on 1 hour. We had the same fair value gap on 1 hour after the breakout. You can see that on 1 hour, I never closed above 50% of the fair value gap. This is the only candle that closed above 50% of the fair value gap on 1 hour. And on 30 minutes, we had this close above the fair value gap. If you are watching this, let me just show you what I'm talking about. This was our fair value gap. This was the 50% mark. So once we had this close above the fair value gap, myself, I did take a trade here because once I saw this fair value gap holding on 1 hour, it was holding. So I thought to myself, price may not come to retest this level here. Okay, so that's what I thought, and I took a trade here at 50% at this level here. Took a trade here. I took a trade from here. I took a trade from that level there. My stop loss was just above this candle that were close below this level here, and I was targeting this levels down here. I was targeting this level down here. We never got to that level, and I got out immediately after this candle closed above after sweeping this London low. This was our London low. After this candle swept the London low, failed to close below the London low. This was an indication for a reversal or a pullback. After liquidity sweep, you need to see a candle closing below if you want if the trend is to continue. If the candle sweeps the London low here, like it did, and fails to close below the London low, then that high chances are the price will not keep continue pushing down, and that's why I got out. I got out here. That's all. That was almost break even, so that's not a trade that I'll count. The real trade that we should have been waiting for. I got a little impatient there, and I see uh, it's a virtue to be patient in this game. It's a very strong virtue to be patient in this game, because this was the trade I was waiting for. This was the trade I should have been waiting for, and I didn't trade this move because I'd already given up. Once I saw this sweep of liquidity, this move didn't look good for me. But it actually played out. So for those of you that got this move, you could have taken your profits around this level here, TP1, TP2, or even below this week here, TP3. TP1, TP2, TP3 would have been hit, and you'd be out in profits with profits. Even now, you'd still be in profit, but at this level, I would advise you to just not advise. What I would do myself, I would close this trade. If I was still in this trade here, I would close this trade. Remember, everything I put out here, it's just for educational purposes. This is not financial advice to trade. Uh, this is just my opinion and my outlook of the market. Okay, so this is what I would do if I was still in this trade. I would just count my losses and break even here, because this market looks like it's gonna keep consolidating here. Because you can see we had this level here, the 40-50 level here. Uh, Remember, this is a psychological level, and 40-10 here around this level here is also a psychological level. This 40-10 here, yeah, it's also a psychological level. And remember, we have FOMC coming today, so my thinking is price might be consolidating in anticipation for building liquidity for the actual move during FOMC, the FOMC statement, the FOMC statement release which will be happening today. So today, I would trade carefully. I would trade carefully today. Okay, so that's what we had yesterday. Yesterday was still a win, because whoever got this move here, ended the day in profits. So it was a win for us, and that is how many wins now so far? That's 9 wins out of 12. Uh, this could have been a win too. So that's 9 out of 12. Two stop losses, one break even. So now today, let's look at what we have on the charts. Let's dig into the charts, see what we have, and see what the market has for us. Remember, you always do a fresh new analysis every morning, because I told you the market is dynamic. The market is not static. The levels we were watching yesterday, the market might change over within a few minutes, and that's why you need to readjust. Okay, every day. That's for the day traders. So today, fundamentally, we are looking at we had data coming out at 4:30 a.m. on the Australian dollar. The CPI was coming out today on the AUD, and it was negative it was bad for the AUD. So if you trade the AUD pairs, hope you got something out of it. For the USD, this is the news we are waiting for. This is the news we are waiting for today. The Fed rates will come out at 9 p.m. The FOMC statement at 9 p.m. and then the press conference at 9:30. This is what most of the traders today, all the traders today, we are watching this. This will give us a lot of volatility and direction for the market for the future on the USD. So This is the forecast. This is the previous 3.75. The forecast is 3.75. Should we have a raise here? Should it be, if we get data coming out, if the actual is actually comes out greater than what we have here, say we have, say the actual comes in at 4%, that will be that will be good for the dollar. If it comes out, if the actual comes out greater than the forecast, that will be good for the dollar. And if it's good for the dollar, then we'll be selling gold. Gold will be selling. Okay. If the dollar strengthens, gold sells. If the data are coming out today here, will be bad for the dollar. If it's negative for the dollar, if it's smaller, if we get something like 2.5, then that will be bad for the dollar, and that would mean gold would be buying. Okay, so that's how you interpret the Fed rates. But the actual move will come from this. The actual move will come from, or what's in the statement here. Uh, or what the projections for the future on the US inflation will be. That's what will fuel the actual move today. Okay, so let's watch out for that. Tread carefully. This is very big economic news on the USD, so tread carefully. Uh, that's what we expect today, unless we are to get anything on the conflict between Iran and the US. I don't see much to look out for today. Okay. We can see Iran launch ballistic missiles towards a US base in Jordan. US officials said that was how many? 8 hours ago. You can keep an eye out for any breaking news here that could shake the market. Today, our main agenda is the FOMC here. FOMC, the Fed rates. So real quick, that's a lot of explaining I've done today. So let's try and be quick. Jump into the charts. I'll not explain a lot today on the analysis because time is running out. So our monthly resistance is up there. Our monthly support down there. But on the weekly, our weekly support is down here. Our weekly resistance up there. The daily, our daily support is down here. Our daily resistance is up here. This price has to break through this resistance first. This is the internal structure. It has to break through this resistance first before we can come to this level here, which is the swing structure on the daily. On 4 hours, on 4 hours, we are looking at, we had this break of structure, change of character. We had this break of structure here yesterday. We are looking at this break of structure here. We had a break of structure here. Did it really break? That's the low. The low is 2206. Closed at 2208. 2208. No, we didn't have a break of structure here. This is not a break. There's no break of structure there because this is 2206. The low here. The low here is 2206, and this one closed at 2208. So we don't have a break of structure there. There's no break of structure there. So remove that one there. What we are looking at, this is still our low. We still have our low here on the 4 hours. This is still our low here. And our high, we have our high up here on 4 hours. That's because we are focusing on this change of character here. focusing on that change of character there. Okay, so that's what we have on 4 hours. And on 4 hours, I like to use the bodies. so here so here now we're going to use these bodies here. We're going to use these bodies here and identify these wicks. The lowest wick is this one here. Identify this wick here as a target and identify this other wick here as a target. Okay, this is our 4 hour range here. All this is just consolidation because once we had this break here, price has not broken above nor below our level. So on 1 hour, on 1 hour now is where we have, did you have a break? No. This was our last break of structure. Once we had this break of structure. So on 1 hour, we're looking at this break of structure here. We have that break of structure there. And we have this resistance up here. Excuse me. And the support is down here. So yeah, the support is down there. So once we get to this level here, I'm going to remove this one. I'm going to remove this one, and now this is our support down here. This is our 1 hour support, 1 hour resistance, 1 hour support. One hour resistance, 1 hour support. Jump down to 30 minutes, and on 30 minutes, on 30 minutes, this is what we are looking at. And we didn't have a break of structure here on 30 minutes, did we? No, we didn't have a break of structure. Neither did we have a break of structure. This was the last break of structure on 30 minutes. So this is what I'll do. I'll be looking for trades below this level here and above this level here. If you're to look for trades, this would be my potential buys. Potential buys above here. And this would be my potential sells below this level here. Potential sells below. Within this level here, this may not trade zone. This may not trade zone here. No trade zone. Okay, so should you get the buys? The buys will be from here. Push the buys up to, let me see. I like to target the 4 hour liquidities. So if I'm to get that buy, I'll push it up to there. This is pre-FOMC. And if we get the sales, from here, I would be pushing it down to this level here, down to this low here. Okay, so that's what is a target here. Is my target here. Always remember, trade what you see, not what you think, and risk management is always key. The goal in this game is to protect your capital as you grow it. Protect your capital as you grow it. Okay, so that's what I'll be looking at today. Is what I'll be looking at today. But before we get to those levels, remember we have this liquidity here, and we also have this liquidity around this level here. For the sell side, we have this liquidity here. We also have this low here, this lows here. Okay, so that's what I'll be looking at today. This is pre and FOMC.